Welcome to the Something Good podcast, hosted by Renee Mueller, powered by Verly. This is where we interview top business professionals, industry insiders, operational managers, and thought leaders from around the nation, diving into hot current topics to help you experience something good.
All right, today we have Matthew Meyer. He's in the hot seat, so we're going to speak with him regarding property management and his experience with finance, whatever we want to talk about. I guess we're going to cover all topics. So let me just start out by saying I think you've been with our company now for almost 60 days. Is that correct?
Probably getting close.
Somewhere in there. Yep. Does it seem like a year?
I mean, yeah.
You're fully onboarded, ready to go. Walking on 2 feet, just kind of taking charge, right?
That's right. Well, that's part of the job, is just taking what comes that day. So that's what we're doing. It's not really a defined job description. It's not really a defined type of a job, right?
You have a long list of things.
There's a long list of things, but there's always more room at the bottom of the page to add more things,
Agreed.
Right?
That's for sure. That's for sure. We'll get some of the other stuff off. So let's, for starters, talk about your background just a little bit. I think it's very interesting, and we were just joking before we started here about both Matts having a background in journalism. So when I looked at your resume, I thought it was very interesting that you're a numbers guy, yet you have, is it a minor or an undergrad in journalism?
No, I majored in broadcast journalism. I minored in mathematics.
Okay. Well, so opposite of what I thought. So, and the funny thing about that is that most who I know that are in a background with finance, numbers, anything like that, really do not have the same sort of personality that goes into journalism. So tell me a little bit about that.
Yeah, I'm kind of a unicorn in that. Yeah, my joke is always that people go into journalism because they don't want to go to the math class, and people go into like engineering and math because they don't want to talk to people.
Very true.
And so usually those streams don't cross. But in my case, I was really interested in telling stories, getting to know people, and that's what drew me into journalism. I had started out my collegiate career in engineering. And so that's how I kind of got into the mathematics, because even just to get the basics for the engineering classes, you basically had to get a math minor. So I started off that way. I was in industrial engineering, which they call people engineering. So it's how
Why is that? Industrial is people. How does that?
It's how to organize the people within your industry to be more efficient.
Oh.
So
we need that.
Where do you and a lot of this, of course, it's can be used in any industry, but a lot of what I was training at was in manufacturing type of industries that would be, we're making tennis balls. Where do we put the materials? Should we put them at shoulder height? Should we put them at above shoulder height? Should we put them below? How can people utilize the resources to complete the product faster?
Okay.
Should they be standing? Should they be sitting?
In what year was this that you were in college?
This would be like 2000.
2000 you started, okay.
Yep.
So at that point, were they talking yet about robotics or anything like that?
Of course, that was part of it. I mean, there's robots and there's cobots. So there's cobots would be robots that work with people. Robots would be machines that do the work.
Yeah. So, I just find it very interesting. I guess I'm asking because as we've looked at the last, I would say 2 to 3 years for sure, the workforce is very limited. Human capital is difficult to find, and it seems like there's a lot of movement within many roles. And so,
well, in robotics, I'm not an expert. I've kind of moved on from that, but robotics is by far more efficient, but it's also by far more costly.
Yes, that's right.
And the technology is upgrading, and to have people that are experts in repairing and maintaining those machines and making sure that everything is spec'd correctly. That's also costly as far as human capital. People have to be experts in the
how to run that, just
maintenance
like the systems here.
in operation. Yeah.
Yeah, exactly.
So they were talking about that, surely. And that was just kind of part of my college career. When I got into it and started doing some job shadowing, I kind of got away. And again, maybe I didn't take the time to explore all the possibilities because there was more industries that could use industrial engineers than just manufacturing.
Right.
But I wasn't in love with manufacturing. I wasn't in love with, standing behind people on a line, counting how many of the widgets they were making,
right,
and how can we make 2 more. although that's a fun problem to solve, that's not a life's passion,
Yeah.
right? So again, I kind of moved on to, what do I like to do? I want to connect with people. Even though, again, engineering is dealing with numbers and you got your nose in the books a lot. Industrial engineering, you really are part of the team with the people. And so I did have that connection that I wanted to kind of further explore. And I really got along with the dean of the journalism college. He just really sold me on this opportunity to come in and learn to tell people stories, communicate with people, and the value that I could bring to the world doing that. And so I moved up. I walked the other way across campus, and I finished up my college career with a journalism degree.
That is very interesting because the two definitely don't really go hand in hand. But
no, but there are some commonalities there.
Okay, so let me ask you this. I've never asked you this before, but is this how you met your wife?
No.
Okay.
But
because she was in
advertising,
okay,
and we graduated on the same day from the same college. Never knew each other.
You are kidding me, right?
We were probably in the same building for 6 hours a day at UNL.
Oh my gosh, that is hilarious.
Literally graduated on the same day. Probably sat 2 rows away from each other at our undergrad college graduation.
Yeah, and
we never knew each other until later in life.
Really?
So, I've got a picture. My dad is a photographer, hobbyist, and I know he's taken a lot of pictures of that day. And so I'm wanting him, once he gets into his retirement, to dig through his archives and find some of those pictures from my undergrad graduation and see if we couldn't find Heather, my wife, because I guarantee my last name is Meyer. Her maiden name was Schultz. And so we were probably sitting pretty close to each other. And
very, very interesting. Yeah.
So, yeah.
Okay. So on that note, I guess tell us about Heather a little bit, because she is obviously in marketing. She's a dean of students.
She's a professor of marketing.
I call her dean for some reason every time I go to introduce her. So
maybe someday. But
full professor. Okay.
She's a full professor. She was pretty much laser focused on her dad was a professor, had spent time at several universities, and she was just laser focused on that's what she wanted to do. So she got her undergrad. She went right in to get her master's. She went to University of Illinois for her master's. And then once she got her master's degree, she went directly into the PhD program at the University of Texas at Austin. And then she went directly into teaching at UNK. And then she just had climbed the ladder. So she's pretty young for somebody who's a full professor.
Right.
And her publications, again, for somebody of her age, is pretty impressive.
Mm-hmm. And she's in a pretty unique area of marketing, right? Where she really can look at people and tell sort of what their buying habits are, maybe what they're going to be doing next, sort of analytics. Is that correct?
Part of what she does is study what story are they trying to tell with the purchases that they make, specifically through clothing.
Yep.
I think that's what, again, maybe her focus is.
Yeah.
But it certainly doesn't have to be limited to clothing. But when somebody buys a Calvin Klein suit,
right,
what are they trying to tell the world?
Yep.
When somebody buys a Gucci purse,
right,
what are they trying to tell the world? What are you trying to show the world? And she likens it to being an actor on a stage, right? Because we're all actors when we're walking around in the world. Right. People are seeing us, and they're seeing you drive a certain car or wear a certain item of clothing. And we know people are using that to be influencers,
right,
or
present
to
themselves in a certain way.
Present yourself as successful,
even though they
or
say clothes don't make
intellectual.
A man, right?
But I mean, that you only get one chance to make a first impression.
That's right.
So
I agree.
The first impression is, oh, this person is dressing nice. Maybe they're a professional.
Yep. And I think that says a lot for their personality too. I don't know if she ever gets on that topic necessarily, but yeah, I mean, I think certain clothing styles tend to tell a person's personality, and that's always interesting to me as well. So it goes into marketing.
Well, and I'm not a fashion person, obviously. This is honestly about as dressed up as I get.
Yeah. Well, today was picture day. So
today was picture day.
Perfect.
So
yeah.
But fashion is always changing. And so it's a garden that you can really cultivate as far as data, what's new, what's the new trends, like you said, because what's in today 5 years ago may have been completely different.
Changes so fast. Yeah, so fast, just like tech. I mean, and that's where people want the data. So it goes back to all those data grabs for the big companies. We've talked about this a few times as far as, I mean, really getting into some of the tech pieces, some of the programs, some of the insane big purchases that have taken place because of that data grab, and so everybody wants to know how to predict those analytics, how to see, who's buying what and why, so that they can plan for the next step, right, and target them, So some of the programs we've looked at have been in regards to home purchases, why people do that, or renters and what people are looking for, so that you can build to that trend or market to that trend.
Sure,
So very interesting.
Home purchases, real estate is another, in that same realm of people are buying houses to present themselves in a certain way, to tell a story, to, it's part of your life. Right. I mean, you're raising your family, or you want to live close to work, but you're also buying something that, you're wanting to be part of your personality.
Right. Exactly. And that goes into, how they're decorating, what they're doing on the inside, exactly.
Absolutely. That's another portion of it.
Yeah. Yeah. Very interesting. So you guys are living in Kearney now, you and your family, correct?
Correct.
You and Heather and 2 children. And the path to meeting you, I think, is very interesting. So, and I firmly believe everything happens for a reason. So just getting into that just a little bit, when we looked at bringing on Kearney, I had spoken with, and maybe it was prior to this even, I had spoken with Tamara Toof, who you're friends with, and she had said to me several times, I want to say definitely more than 2 or 3 times, she'd said, I have this gentleman, he's living in Kearney right now, you've got to meet him. He reminds me of you when I talk to you about investing in different projects that you're working with. I think that's right up his alley, and you've got to meet with him. And so, fast forward 2 or 3 months and talking with you on the phone, I think the first time, I want to say 3 hours, it seemed like went by very quickly. Probably wasn't that long, but just talking about different commonalities and the mindset, and especially with regard to how you look at a job versus how you look at what you want to do for the rest of your life. You have a job, that's what you went to college for, obviously. And so you've started investing how long ago?
I would say 5 or 6 years ago.
Okay. So you've got a few commercial projects and started diving into looking at multifamily and what that looks like. And Heather, I think, has encouraged you a little bit.
Oh, yeah.
I mean, I was very impressed by that, because usually you have one side holding back and the other, ready to just launch full force. And so, Heather was like, nope, just take off, and, you guys go talk about your thing and let's do this. I'm all in. And that was very impressive to me. And so here we are, you're on board as senior property manager, also CFO, which is right up your alley. The two really go hand in hand. And as far as what the property management division offers, we've talked about that recently as well, which is a whole host of things really not familiar to the Columbus market, because of the fact that we haven't seen this level of development for quite some time. The multifamily projects really hadn't launched until Flats on the Fifth was built, which was 2019, I think I said, was their launch date. And so not having any multifamily built for 20 years in Columbus, there was really no big demand. But as we launch into this year and the next years, we have commercial projects, multifamily projects. And so having someone that can assist the management team with overseeing all that, looking at all the numbers and the performas. I know it's a little bit of a daunting process, especially when you're thrown in and sort of trying to figure out all the systems and everything else. But what has that process been like? And you kind of touched on that as we started. It's this long list of things and ever changing, and so you're obviously able to pivot really well. But
right. Well, and we got into real estate because I believe in it, and I know that's one of the reasons why we connected, is because we have this commonality in our belief in real estate as an investment, as a way of life.
Yep.
It's different from other investments. We know that there's all kinds of different ways.
Yeah, you have a retirement, right?
There's of course.
Mm-hmm.
There's all kinds of different ways that people can choose to focus their investments. I happen to do the research on multiple different ways that we could go, and kind of fell in love with the numbers of real estate. Again, I wouldn't call myself the smartest person in the room as far as numbers go, but I can hold my own.
I bet you are.
Well, Matt, okay. but especially when it's yours.
Yes.
When it's your hard-earned money that you're plunking down. So,
exactly.
and we've talked about real estate being a legacy investment. Honestly, I'm not even thinking about it for me anymore. I'm thinking about for my kids. Like,
right.
What's this going to look like for my kids? Having kids just changes you in that way.
It does. Completely.
Of course, I want to do as much as I can for myself, but it's all so I can pass it on. Well,
and to give you that freedom, I think I asked you early on, you read Rich Dad, Poor Dad, right?
Yes.
I mean, that was one of my favorite books. I was 19 and read that in college. And I remember, a lot of my roommates thinking, well, why do you want to buy property? You're 19. What are you thinking? You're crazy. And at the end of that year, the first year that I purchased my first property, having these handfuls of cash, literally, and my roommates thinking I must be doing something illegal, and looking at, well, how do I buy another one? And how do I buy another one? And making your money work for you. And that was so intriguing from early on to me. And looking over the course of the last 20 plus years that I've been investing, real estate has been by far the best investment tool I've had. And part of that is because it's what I know. But if you look at the average, we'll say, as far as stocks go even, and of course that's not my forte, but, that's 5 to 7% return, where some of the investments I've made with development, the residential subdivisions, with the commercial subdivisions, with even just the we'll call them fix and flips or buy and holds, that has been an average of, 20 to sometimes 50% return. So just looking at the average, and looking at the fact that you can control your destiny so much more that way. You said it really well, I think, when we first spoke about you coming on board. I have a job. I don't need another job. I want a legacy wealth. I want a way to have that return in the future and for future generations. So I think that's the best part of it. And that's something that not a lot of people will take hold of. It's letting go of maybe securities. It's letting go of, maybe you have benefits, with your current job, the retirement everybody's looking at, you're encouraged to, set up a 401k and, have the company match and all that good stuff. And so, at the end of the day, it really is, it's a risk to some degree, but there again, like I said, you get to control your destiny and what you can make. So
yeah, that's totally true. And Heather was actually the first of us to read Rich Dad, Poor Dad.
Really?
And so that's part of why
How did that happen? That's interesting.
Why she just, I think maybe her dad had recommended it to her.
Wow.
Or somehow along the line she had read that. And so that's part of why she is so supportive, right?
Oh, good.
Because she understands from that perspective, the difference between, working paycheck to paycheck, spending what you earn. And, whether that's, you earn $100,000 a year, you spend $100,000 a year,
right.
Or,
and that's usually what happens, isn't it?
Right.
When you have that job and you have a set income coming in, then you have set obligations tied to that set income.
Absolutely.
Rather than, yes, you're really taking the dollar and making it earn 10, and making that work for you. Right. That was what always intrigued me. It's like a lot of people don't understand that philosophy, and even reading the book, some may not take hold of that, but I really think, that is what intrigued me so much early on is the fact that you really could make money work for you.
Absolutely.
Yeah, it's just incredible.
When I was a lender for 11 years.
That's right. I was going to ask you about that.
And so the joke in lending was always people would celebrate a $300 a month raise with a $500 a month car payment.
Yep.
And it is for 95% of the population, that's what happens.
Yes, that's exactly right.
And part of what we would do when we were cash flowing was figure out what their business. I worked mostly with agribusiness
poor farmers.
People.
Yep.
Wow. But so we would analyze their crop yields and their fertilizer inputs and all the parts of the family business that went into the crop production or the cattle production, and then what was left over was the family living account and what goes into the family living account. And again, most people, number one, couldn't tell you what they spend, and you could just about nail it every time by saying, well, it's everything you earn.
Yep.
It's whatever you have left over, that's what they spend.
Yep.
And and it's a flipping mindset, and more people earlier in their lives need to come to that realization.
Yes.
That if you can start that snowball working for you, look at all the debt that you're paying for
Yep.
that car.
Yep, exactly.
Or, on the credit cards, you're getting, you're getting all these debt payments that you're having to struggle against.
Right.
And if you can get to the point where you're a lender, or you're making the money work for you,
Yep.
you get that
Well,
snowball
that's right.
rolling
Next
down
thing
the
then
hill.
you get into private money, exactly.
Exactly.
Yep.
It just grows and grows and grows. And again, the earlier you come to that realization, the more time you have to reap those benefits.
Right.
And so again, we were fortunate that my wife and I both had that same kind of a mindset. And so when we did have mortgage debt, we attacked it. We got to the point that we could start investing early. And then it was, what choice do we have?
Yeah.
And again, for my time as being a lender, again, she read Rich Dad Poor Dad, and she was probably into more like the business podcast before I got into it.
Oh, I've got to pick her brain next.
I was, eventually you got into it, and then I really picked up steam, and it got to the point where she's like, don't talk to me about that.
Right.
Like,
exactly.
She just got tired of hearing the same, because I'd get juiced up hearing these people talking about their success stories, and I wanted that. I wanted to get into that.
Yeah.
And she's like, "Yep, I'm in. I just don't want to hear about it anymore."
Yep, that's right, exactly.
Because we can sit here. She's like, "You've said it the same thing, every day for the last 30 days. I'm in. You've sold me.
Yep.
We just need to get going."
Yep.
But from my experience as a lender, looking at balance sheets that had real estate on them versus balance sheets that don't have real estate.
That's the key.
I mean, because we'd gone through cycles.
Yes.
Of course, ag has been doing pretty well lately,
This year.
but there's been ups and downs.
Oh, for sure.
And when
just like real estate.
When we had ups and downs, when we had the downs, people would come in, and the first thing we're looking at is, what kind of collateral do you have? What kind of what equity do you have? And I mean, to a person, the people that had the resources to get out of trouble were people that had real estate on the balance sheet.
Yep.
And the people that had just financed the newer and bigger and better tractor, and I'm still going to rent my real estate. I'm just going to buy more and more equipment.
Yep.
I mean, again, I could get into
we go down
the psychology of that,
yes.
but the people that had real estate on the balance sheet and built equity that they could tap into in an emergency.
Yep.
We always had options.
Yes,
I mean,
exactly
you always have that as an option. If
Right.
things go bad, we can cash out, refi some of your real estate equity.
Yep.
You're not able to do that on the equipment side as much. And so again, I was just seeing the power in ups and downs. Of course, when real estate's doing well, you want to be in real estate.
Yep.
When even when real estate's doing bad, there's still equity there. It's not going to go to zero. It's not going to lose all of its value.
Agreed.
And so it still has an inherent value that you can use to buoy yourself through the downtimes.
You got it. You hit on a great key, and that's something we try to coach the agents here as well, is not only buying those assets that will protect you and help you get through those downturns, but looking at how they do really build wealth and how that is another business. So if you have, several buckets, you can get through those hard times. And so being in the business 20 plus years, 22 years, I think I've seen probably 4 major downturns. And the entire time, thankfully, and this came on the encouragement of my father, thankfully, but, I've had real estate for a long time. And so having that has helped, through the high interest rates, through the overabundance of properties available, and, huge slump that we had in 2008, 2009, and looking at the agents that, the ebb and flow of the agent count, so years like we've had the last, I'll say 8 to 10, especially the last 5, you see the numbers with the membership for realtors in every area just skyrocket, but of course the ones who don't have the right mindset or the right assets to get through those hard times, which we will see again, you have to have that cycle sometime in the future, they're the ones who are first out. And so that is very interesting, but looking at it from that standpoint, when you were in ag, is yes, those assets, those people who had real estate, land, any sort of real property, are the ones who made it through. So,
and to your point, if you're analyzing the cash flow and you're buying things that cash flow, even the ups and downs don't really hurt you that much, right? Because you're generally locking in your interest rate at the bank, at least for 5 years, if not longer. We've had the opportunity, been really blessed to have an opportunity to lock in super low interest rates for the entirety of
even with commercial
loans.
for long term,
even on commercial,
right?
And so it's that you win if rates go down, you refinance. If rates go up, you stand pat.
Right. Yeah. Especially here recently, you're right. I mean, it's been one thing I've been preaching for quite a while, but I would say definitely the last 2 or 3 years, and maybe some of that was brought on by COVID. But we refied this building with SBA, which is very long term. I think you can get either 30 or 40 fixed rate, which is very low, and with the program that we utilized anyway. And I think a lot of folks who own businesses, especially with regard to having a real estate as a piece of that business, the building, have done the same thing. And so it's pretty incredible when you look at that opportunity. Yeah.
So it's just like I said, you could speculate, you could buy something that's not cash flowing and hope that it goes up. And real estate honestly is an inflation hedge, because you're getting as the prices of everything goes up. I mean, rent's going up. Well, rent doesn't typicly go down, and so it's gonna float up with the waters of inflation to
well, especially as the rates go up, like you said, so there's nothing else I can think of that you could purchase at a rate, let's say anywhere from 3 to 5%, and the same asset appreciates at 20%, especially last year. That's pretty incredible.
And the leverage you can put on.
Yes,
I mean, we could go on and on.
Go on and on. Yeah, exactly.
I mean, the leverage is probably one of the most exciting things about real estate to me.
Agreed.
When you get down to it, I mean, there's tax advantages.
Yep.
There's, potential for immediate cash flow. It appreciates while it depreciates, and all that kind of stuff. But the fact that you can walk in, and the banks love to make these kind of loans, they're well secured, because real estate just doesn't devalue.
Right.
I mean, we've seen bubbles, and you've seen ups and downs and bubbles, and there's maybe times, years, weeks, months where real estate isn't super strong, but banks love to have real estate loans, because the collateral's always there.
Yep.
You can always go check on it. People aren't going to wreck it, and
they have an asset they can go seize if they need to, obviously.
Right, and that's a big part of it. Is we've got solid collateral, and you walk in to the bank and you want to take out a loan to buy stocks, they're just going to laugh at you.
Agreed.
I mean, nobody wants to use stocks as collateral.
Right,
I mean, literally,
tangible.
the stock market can fluctuate so much that you can be 100% collateralized one day, and the next day you're undersecured. With real estate, that just doesn't happen. And so, like I said, the fact that you can leverage it, where you're earning, and that's how you get those 20% returns you're talking about, right? Because you're getting 7 or 8 or 9 or 10% on the cash you put in,
right?
But then when the bank's putting in their money at 5%, and you're still earning 10% total, you're getting an extra 5% spread on 80% of the project.
Exactly.
And so it's just, that stuff just adds up, and it just supercharges the money that you have to invest. Right. And again, that's why I get so excited about real estate, because you can look and say, and I would tell people this when I was a lender, is, I can literally draw you a map on how you're going to be a millionaire. And I can show you how you're going to be a millionaire. And all it takes is, we make this real estate purchase and we cash flow it. Even if you throw off no extra cash for yourself, you can just make this payment. Yep. Obviously, I was in a government lending position. And so we partnered with banks a lot, but we could do loan side. We could make basically the down payment portion of a loan. The participating lender would make the typical commercial side of the loan. Right. We could make $1 million purchase, and I would tell them, all you have to do is make the payments. If you make 30 years worth of payments, you're a millionaire.
Right. Isn't that incredible? And I tell investors all the time that tell me, I want a 10% return. Well, that's great. But even if you just have someone else paying the payment for you, and you have the depreciation on that asset, to me, that's a win-win. It doesn't have to be this huge cushion that you have every month. I mean, that's great. But yeah, I mean, is this boring to you, Matt Lindbergh? No. We're just going on and on. I'm like, okay, let's take over the world.
Renee and I want to keep going.
Exactly. So I'm excited to get you into the development piece, here in Columbus. And we've talked about housing, even though it's only been 60 days. So throwing you into several projects. And so I'm excited to introduce the multifamily that we're looking at to Columbus. I know some of the other groups and individuals in leadership are aware of some of the projects going on. And so this is one that we hope to launch. We will launch sometime this spring. And so there's more to come on that, I think, with the next conversation that you and I have, as well as the property management piece, introducing more of those members and what that offering is, and getting more into, you have your real estate license as well. So,
Correct.
I don't know that we've even mentioned that. And so just, you're so diverse with what you've done so far. And it's very impressive, because to have that kind of drive, to have that kind of experience and education, to back it is fairly rare, to be honest with you. And the fact that you're looking at actually moving to Columbus, which is part of the drive behind the chamber and local leadership here, to recruit, especially, I think, a demographic that will keep growing, with younger children and future generations, that hopefully we can force to stay here and help grow Columbus. And so that's my passion. That's something that I believe in and get excited about as well. And so we have several quality of life projects, but the multifamily will be a big one that we'll keep discussing. So
absolutely. And there's a lot of opportunities in Columbus.
Yeah.
We're coming from Kearney, which is a similar community. And so we're looking at, this looks like the community we're already associated with, but there's a lot of big things that are happening in Columbus too.
Yeah.
And I think that, again, as a real estate investor, a lot of times you're looking at what's the path of progress. Yep. You don't want to buy in the hot market necessarily. Right. You don't want to go and buy in the market like Austin, Texas, or someplace like that. That ship has already sailed.
Yep, exactly.
The money that people are making now are the people that are coming in and buying.
Yep.
Right? The people that invested 5 years ago and are selling to the people that are buying today. Right. So you're looking at, where's the path of progress? And, we're looking in Nebraska. We own properties, near Lincoln, Seward, Nebraska, in Millard, in Omaha. And it just seems like the shift is coming kind of from Omaha to the west.
Oh, completely.
Starting in Omaha, Millard was a hot market. Bennington, Elkhorn have been kind of the old news now. Fremont is now.
Yes, exactly.
And you keep kind of, where's the arrow pointing? Yep. It's pointing right at Columbus.
Well, yeah, it really is. And I'll tell you, there you go. See, look at that. Woo! So the Mike Flood event the other night, that we had the dinner, and that was very interesting. I'll say he gave some insider trading secrets, and one definitely was, the 4-lane between Columbus and Omaha it's almost complete. And that has made it so much easier and quicker. It's literally an hour to get to West Omaha. And of course, Omaha is moving further west. And so, it makes a difference. And so, as we move on and looking at that piece of it, as well as the highway between Norfolk and Yankton to be 4-lane. And they're adding, I think, 700. No, they're going from 70 to 700 slips at Lewis and Clark Lake in the next 2 years. And so, his ploy was, this is a spot to be buying in and to be developing in. And when you look at some of those rural communities, they're still considered rural. So such as, I think you mentioned, North Platte, O'Neill, some of those, anything pretty much west of Columbus, but even Fremont, there are funds available for rural workforce housing. They want to encourage and stimulate growth in many of those areas. But he had said several times, and this I've heard over and over again, like you just said, it's pointing back to Columbus. Look at what's happening with the casino and some of the other developments that are here. And you have that infrastructure connecting the other communities, Grand Island and, Columbus to Grand Island and Columbus to Omaha. We're right smack dab in the middle.
Right. When I was in college, everybody was talking about Lincoln and Omaha.
Yep.
That joining together.
Yep.
And that just hasn't really come to fruition.
No.
And honestly, those communities in between Lincoln and Omaha are doing fine.
Yeah.
I wouldn't say that it's not developing.
Right. No, Seward's doing amazing.
I assumed that, when I was in college, that by now that Lincoln and Omaha would basically be the same city, because everything would just, Lincoln was growing to the east and Omaha was growing south, and we were just going to see those two cities connect. And they've just stayed separate markets.
Yep.
Whereas, like you said, these other communities, developing this 4-lane highway is a huge deal.
Huge deal.
My wife's family's originally from West Point, and they've got a 4-lane highway there, and that market is just exploding.
So those are the trends you want to look for, and that's what's happening.
Exactly.
So yeah.
And so again, the path of progress. Yep. What's going to happen in 5 years?
Yeah.
In 5 years, you're going to wish you did.
You will, exactly.
And that's kind of what we're looking at, and the reason why it's attracting us from, honestly, good jobs, stable, would never have to worry about anything in Kearney.
Yep.
So why are we going to pick up sticks and change? What are we looking for?
It's
that's
the job
better?
factor.
And a big thing is the job factor. Yeah. Because you want to do what you love.
Yeah.
And another part of it is being close to family, because just like you said, now all of a sudden Columbus is from, instead of being 90 minutes from Omaha, it's an hour from Omaha, where, both of my in-laws and my parents both live in Omaha. And so now all of a sudden we're closer to in-laws.
Right.
But it's the opportunity. It's the opportunity to get in on the ground floor or the first floor, the second floor of.
We're going to pole vault you to the 12th floor here.
Well, I'm looking for you to help pole vault, because we're stair climbing.
Yeah.
And we're happy. I mean, we've been happy being stair climbers.
Yeah.
But, I think the opportunity that we saw was, this is a place we can get in the elevator.
Right.
I mean, this is where we can go fast. We can, as you know, it's even though you and I both have the same kind of passion for these projects, not everybody does.
No.
I mean, if you pull this kind of stuff out at a cocktail party, 80% of people are just going to go and find somebody else to talk to, because they're like,
I know.
I want to talk about the Huskers. I want to talk about something else.
That's so true.
I spend my whole week thinking about money, and I want to just talk about something fun, which I do too. I mean, I don't want to.
But it's far different. It's not just money. It's not just a job, but for some people, you're right. They wouldn't recognize that. And so I think, looking at the other side of it, the other side of the coin, what I recognized in you was that very thing. And Heather as well, you present this opportunity to many people and they're going to go, oh my gosh, I'm never going to do that. That sounds like a job. It sounds awful, and maybe just not knowing enough about it is key, but it's also letting go of that security, where you have that secure paycheck, maybe, what does this mean? And so for you and Heather both to recognize the opportunity, to me, it meant, I'll do whatever I can to pole vault you as quickly as possible, because human capital is the key, and that's hard. I can find capital, I can find money sources. They're limitless, especially the last year, I would say, with all the money floating around out there. So investors are not hard to find, but the human capital is very hard to find.
Right.
So I'm excited to have you guys here, and with rates going up, you probably should really be looking at housing.
Well, yes.
Unless you're all going to live in that little triplex.
I don't think so.
So I'm excited for the next chapter, and we'll look forward to the next podcast. And so, is there anything else you want to add before we finish up for the day?
No, like I said, I'm glad to be part of the team. I'm the passion that I have for investing, and I'm hoping with the property management that we can help find other people that are starting, that are looking for somebody to help them put the
path to being a millionaire.
Right. Well, I mean, it's there.
Come sit with Matt. He'll show you the path and show you how you are a millionaire, or you could be a millionaire.
And it's legitimate. And I know you say that a little bit as a joke, but it's true. No, it is legitimate. And sometimes, again, people are out there who are lawyers or doctors or
W-2 income of any kind.
W-2 income of any kind. I mean, a supervisor at a fast food place, there all kinds of people are looking for an opportunity, and sometimes you don't have the time or the resources to sit down and do all the research, to crunch all the numbers, to to take care of the asset when you get this 10-plex, who's going to collect the rent? I mean, it's one thing to get the rent check sent to you. It's another thing to deal with the maintenance issues that come up. It's another to deal with. There's just all kinds of
whatever
things
tax
that can come
issues up. Where you have that expertise. We have a whole team of basically in-house marketing, in-house accounting, in-house maintenance. And so it's a big deal, and it is more than just collecting a check. Yeah, and so that's where I see property management is a service to people that already own assets, but I think it is a huge benefit to people that are wanting to get started and wanting to. I hate to say put training wheels on it, but have somebody that's going to be looking out for you. I mean. It's maybe you take the training wheels off, and now you got mom or dad behind you on the bike, and they're just making sure you're getting going in the right direction. And if what you're good at is making money away from the real estate, and real estate's just your passive investment, then you go
and do that thing and maximize your income, and we'll help you maximize the investment.
I was going to say, I like that because that's so true. Anyone with a larger W-2 income, and I've had a ton of investors in that arena call and say, I think I'd like to purchase a multifamily or some sort of real estate because that is the best way to protect your income. And so it's not about what you make, it's about what you keep, right? And that's the biggest piece. When I ask people what their goal is, and most agents are synonymous for this, so I'll ask them what their goal is for that year. Well, to make $1 million. Well, how about you tell me what you want to keep? Because you could make $300,000 and keep it all and have the same lifestyle as maybe making $1 million, and spending it all, and or being taxed to death, because of that. So
yes,
it is pretty incredible.
Yeah, I mean there are so many benefits to it, and like I say, if somebody's out there listening and was wanting to talk with us about how they can get in, how they can join the club.
Yep.
Call
Matt Meyer.
That's what we're here for.
Exactly.
And like I said, I hope that some of this is infectious when we're talking about, and it's not braggadocious as, we're doing these things and we're being successful. It's, I learned on a commute listening to podcasts back and forth and just listening to guests on podcasts tell their stories and their success stories. And, and you can too.
Yep.
You just gotta,
plug into the right people.
You got to plug into the right people, come up with the right game plan, and execute that game plan.
Agreed. It's phenomenal. I don't think it's braggadocious at all. If you help enough other people, you're always going to get what you want. You help them, you're going to get what you want in return. So anyway, we'll end on that note. And Matt, I appreciate your time, and let's just rock and roll. So
okay. Well, thank you for having me.